Your trade of the day, it's going to be Tesla today, and it's brought to you by Day Trade the World. As always, scan that QR code, get your day trading journey started in the right way, and the right way to do it is to trade what's moving. Now, when we came in today, I'm not going to know that what's going to happen later on in the session is going to, so I have to get the lay of the land here on how we were proceeding. We were gapped down after that delivery number, and I think everyone remembers yesterday you had that big move to the downside. You had all of the flushes through 250. You're making those huge bottoms at that 241, 242 range. So you've set the range, but here's where I'm going to be looking. It's right back at this 256, and it's like 257.70 or around 258. That's the channel at the top that I was looking for resistance. And when we were gapping to the upside, you had Rivian delivery numbers come through. You had all these names making some big bottoms, and you were essentially gapped up in Tesla and looking like you were trying to decide off that 250. And at the open, really, you were still going back and forth sideways. And we always talk about this. Sometimes you got to wait for that key price. And when I was looking at it, I said in the pre-market, I like that 256 area. If I'm going to short Tesla, that's where it's going to be. And so until we get up, make some highs, and it took until about 10:30 or so before you made a top just beneath that 255. I was like, okay, you have a double top. We're getting close into that range. I took one shot at it a little bit far away, immediately just said, forget it. It's still not 256. Reversed into a nice little scalp long trade. That put in a wick top, and at that point, the high of the day was about 255.70, right? So you had a failed breakout at 55 into that 55.70. That's right in that 256 range. Now I'm starting to look for the short trade. Wick top, jump into the short beneath 55, scalp it out, retest the high, short into that high, able to take some out 54s, 53s. It pops back up, rejects 56 again, short in front of 56 another time, scalp it out. And this is the one trade that I don't like out of this entire sequence. It's right here. At this point, we've been shorting, only getting it in front of that 56. I'm like, oh, this is going down. Let's add to it here. Let's add to the short. Let's sell it down around that 54. I think that was a bit of a mistake. Thankfully, I did leave myself enough room that when it came back up, I was able to add in front of 56 in case it didn't break. But of course it did. And that's the thing. That's Murphy's Law, man. The one time you get away from your price, that's going to be the one time you get in and it's going to run your stop. Therefore, you're going to end up losing more than you want to. But what do we get? What happens? Another wick high through our same entry price level, and then a rejection another time. So I just jumped right back into the trade, this time off of 56. Now, the context of what's happening in the market matters here, because you are testing on the ES at 3,800 over and over and over again without breaking. So the futures, even the NASDAQ, is in a top range and refusing to break it. So you know it's going to be pretty solid. I'm back in the trade off of 56. Then I get one fill. I'm scalping it out, and you can see what's about to happen here. So it's kind of obvious. It retests the high of the day. I'm short in front of the high of the day. And sometimes, bank error in your favor. Like, I was shorting this off of the level into the move thinking it was going to drop. It's not because Elon's going to come out and say he wants to pay full price for Twitter. There's just no way you're going to know that's going to happen. At that particular time, I'm already on the bid. There is nothing you can do about it in this situation. By the time I was literally yelling out to the midday guys, our midday show, Tesla, 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 it's already run through and putting the fills in. There's not much you can do about it if you have resting bids out there as a day trader. But it was essentially free money down into 250. Can't do anything about the 55 bid. Once it came down another leg, I was like, oh, I'm getting out in front of 250. That was level before. At that point, I did not even know what the news was, so I could not do anything but make a judgment call. I'm blind here. Let's get out in front of 250. Once the news was disseminated, then we're working beneath the 250 level, and you're able to say pop, short consolidation off 250. I scalped inside of the range. At this point, I thought we had made a little bit of a bottom, and we're still waiting on confirmation. So it was essentially a free money, like $1.50 to $2 scalp down off of that 250 area, and you're still respecting some of these levels here. The truth of the matter is, if you're shorting this one, it was a frustrating one until it got to those key prices. And then sometimes the best you can do, I mean, I would have had for sure a winning trade on this. There's no question about it. But the best you can do is make a snap decision here. Am I holding? Am I getting out? I did not at that moment in the split second know the news when I was staring at 250, so I just took it and ran. Whether or not it's the right call, you've got to make one in the moment. It's your trade of the day. It's more about the patience of waiting for your levels and then allowing yourself to be right when moves like this end up happening. But it respected that top. Nothing you can do about that. Now we get to see what actually happens with Twitter. There's your trade of the day here on Tesla, as always brought to you by Day Trade the World.